What is going on, everyone, and welcome back to Explain the Charts. Today is October 1st, 2025, and we are doing a deep dive analysis on Alphabet, ticker symbol Google. There has been an incredible amount of positive news for the company recently, starting with a massive win in its antitrust case in early September. The courts ruled against a forced breakup, allowing Google to keep its lucrative search partnerships, which sent the stock into an aggressive rally. Following that, the success of its Gemini AI app, which hit the #1 spot in the Apple App Store, pushed Google's market cap over the monumental $3 trillion mark for the first time. However, this is all happening against a complex macroeconomic backdrop, with concerns over a potential government shutdown, mixed job market data, and ongoing debates about Federal Reserve policy. So let's jump into the charts to see how this news has impacted the price and what we can expect next. Looking here at the daily chart, you can see the story of the last month told in just a few candles. The positive antitrust news on September 3rd caused this massive gap up, from a close around $212 to an open above $226. Notice the absolutely enormous volume on that day, over 103 million shares traded, which is nearly 3 times the average. This high-volume gap-up is a very powerful bullish signal, confirming strong institutional buying pressure on the back of that news. From there, the momentum continued, fueled by the positive sentiment around its Gemini AI, leading to a new all-time high of $256 on September 19th. This is where the stock finally topped out and began its current phase of consolidation. Since hitting that peak, the price has pulled back in a relatively orderly fashion, which is healthy after such a parabolic move. This suggests profit-taking rather than a fundamental shift in sentiment. Let's zoom in on this period from late August to see the action more clearly. The rally from the low of $205 to the high of $256 was a nearly 25% move in just a few weeks. Now, we are in a pullback, and the key level everyone is watching is this support around the $240 mark. We can see the price has tested this level several times over the past week and has held up so far. Significantly, the volume during this consolidation period is much lower than the volume we saw during the rally up. This is a classic bullish consolidation pattern, suggesting that sellers lack conviction and the stock is gathering strength for its next move. However, if this $240 support level were to break, it would open the door for a deeper correction. Switching over to the 1-hour chart, we can see this recent price action in greater detail. The stock is clearly trading in a range, or a bull flag pattern, between the support at $240 and resistance near $253. Right now, the price is hovering around $243, sitting just above that critical support zone. For traders with a shorter time horizon, this is the battlefield. A decisive, high-volume break above the $253 level would signal that the consolidation is over and the uptrend is likely to resume. Conversely, a sustained break below $240 would be a short-term bearish signal, indicating that a deeper pullback is underway. The next logical target for sellers would be the top of that massive news gap from September 3rd, right around the $230 to $232 area. Bulls will want to see this $240 level hold firm. Finally, looking at the 15-minute chart, we can analyze today's intraday action. The market opened lower and has been in a tight, choppy range for most of the session. This intraday price action reflects the broader indecision we see on the hourly and daily charts. There's currently a struggle between buyers trying to defend the $240 support and sellers trying to push it lower. For day traders, a break below today's low would confirm bearish control for the session and add pressure on that key $240 support. A move above the intraday high could give bulls some confidence for a pushback towards the middle of the recent range, around $247. Alright, to recap everything for Google, let's pull back to the daily chart. Your key resistance to the upside is the all-time high at $256. Before that, the stock needs to clear the consolidation resistance around $253. To the downside, the most important level is the immediate support at $240. If $240 fails, the next major support zone is the gap fill area between $230 and $232. This $230 level is the line in the sand for bulls to maintain the strong uptrend structure. Below that, you have longer-term support near the summer highs around $212. Now for some unbiased scenarios. I believe a bullish continuation has about a 65% probability here. The fundamental news is overwhelmingly positive, and the technical pullback appears to be a healthy consolidation on lower volume. This outlook is reinforced if the price continues to hold above $240 and the broader tech market remains strong. The most likely path is a retest of the $256 all-time high in the coming weeks. The bearish scenario, which I'd place at a 35% probability, would likely be triggered by a broader market sell-off or a decisive break of that $240 support. In that case, look for a swift move down to test support at $230. A move to this level would still be considered a healthy correction in the grand scheme of things, but it would create short-term pain for recent buyers. The things to watch are volume and the $240 price level. An increase in selling volume would favor the bearish case, while continued low-volume consolidation followed by a high-volume breakout would confirm the bullish trend. That is our complete breakdown of Google. Thank you for watching Explain the Charts. Please don't forget to like and subscribe, and remember this is not financial advice. Trade smart, and we'll see you in the next one.